If we look at the markets and geopolitical developments, we see that we have entered 2026 with incredible velocity. Breaking news is dropping consecutively, but I want us to look beyond the political noise and focus on the money. There is a massive shift occurring in global capital, commodities, and strategic assets right now. In this video, we are going to analyze three critical developments that will reshape your investment portfolio: the U.S. government's massive move into the metals market with J.P. Morgan, the potential flight of $95 billion in capital from the Middle East, and the formation of a new, resource-backed financial order. This is not just news, this is the roadmap for the next decade of the global economy. Let's start with the most concrete financial data point of the day. A major deal has surfaced involving the U.S. Department of Defense and financial giant J.P. Morgan. Reports confirm that a massive metal processing facility is being established or significantly expanded in Tennessee. This isn't just a factory, it is a strategic move. The project is being developed in partnership with Korea Zinc, a major player in the industry. But here is the critical detail for investors. The U.S. Department of Defense is set to hold a 40% stake in this facility. Why does this matter? For decades, the U.S. offshored its refining capacity. Now, Bloomberg and Yahoo Finance reports from December confirm that the U.S. is securing domestic capacity to process critical minerals. We are talking specifically about silver and zinc. This signals a paradigm shift. The U.S. government is telling us that access to refined silver and critical minerals is no longer just a commercial supply chain issue, it is a matter of national security. When the Pentagon partners with Wall Street giants like J.P. Morgan to build smelting capacity, you know that the physical scarcity of these metals is becoming a reality. They are preparing for a world where you cannot rely on global trade for your strategic resources. Now, let's connect this Tennessee facility to the broader geopolitical map. You cannot separate this $7.4 billion investment from what is happening in Latin America. Look at the recent aggressive U.S. foreign policy moves towards Venezuela. While the media focuses on the political leadership changes, the financial reality is about resources. Venezuela holds massive oil and gold reserves, but look closer at Mexico. Mexico is the world's #1 silver producer. If the U.S. is building a massive silver and metal smelting hub in Tennessee, they need raw materials to feed it. The recent geopolitical pressure on Latin American nations suggests a consolidation of resources. The reports hinting at operations in these regions should be read by investors as a hostile takeover of resources. The U.S. is effectively creating a Fortress America economy. They aim to process Latin American metals within U.S. borders. This means silver is likely to decouple from paper trading and become a strategic asset. If you are a commodities investor, you need to understand that we are moving from a free trade era to a managed trade era where the Americas are being consolidated into a single resource block. While the U.S. consolidates resources in the West, there is a massive liquidity event brewing in the East. A report by The Times London, based on intelligence sources, indicates a potential regime exit plan in Iran. We are not here to discuss the politics, but the money. The report details a plan B for the leadership involving a relocation to Russia, but the financial shockwave comes from the entity known as CETAD. CETAD is a conglomerate of foundations and organizations under the supreme leader's control. The estimated value of the assets involved in this potential transfer is a staggering $95 billion. We are talking about cash, gold, and transferable assets moving from Tehran to Moscow. Historically, when authoritarian regimes face instability, we see massive capital flight. This isn't just numbers on a screen, this often involves physical gold movements and large-scale offshore transfers. If $95 billion worth of liquidity moves into the Russian sphere of influence, or if it is liquidated rapidly, it creates volatility. Furthermore, the Times report mentions that preparations for this transfer, including gold, are already underway. For the global gold market and regional liquidity, this is a massive event. It represents a transfer of wealth that could tighten liquidity in the Middle East while potentially bolstering reserves in Russia. So, how do we tie the U.S. metal plants and the Middle Eastern crisis together? We are witnessing the end of the post-2008 financial order. Back in 2008 to 2010, after the financial crisis, the world was awash in cheap credit. Borders were opening and mines were being cleared for trade. That era is over. The current U.S. strategy can be described as expanding to prevent shrinking, the dominance of the purely fiat U.S. dollar system is under threat, the system is slipping away. To prevent a total collapse of hegemony, the U.S. is aggressively expanding its physical footprint to back its financial system with hard assets. Oil from Venezuela, silver from Mexico, and industrial capacity in Tennessee. We are seeing a return to a bipolar world economy. On one side, you have the Eurasian bloc. On the other, a consolidated North and South American bloc under U.S. control. This is reminiscent of the Cold War, but this time it is not about ideology, it is about who controls the commodities. The U.S. is attempting to recreate its golden age by physically securing the resources of two continents. What does this mean for you? First, commodities are king. The focus on smelting and refining proves that physical ownership of metals like silver, gold, and zinc is becoming a national security priority. Second, regional volatility. Expect massive capital flights like the $95 billion from Iran to disrupt local currencies and flow into safe havens or new strategic alliances. And finally, the new standard. We are moving toward an asset-backed financial system. The currencies that survive will be those backed by energy and metals. We will continue to monitor the money, not just the noise. Thank you for watching.